When we're talking about the housing market and mortgage lenders starting to go bankrupt, I can't really think of a more beautiful place to talk about this than right alongside Biscayne Bay, because it is just so gorgeous out here today. Luckily we got a little bit of overcast and it's not so hot, because otherwise it'd be pretty warm for a January winter day here in Miami. So the weather out here is perfect. So let's check out the water, let's check out the boats, probably even make our way over to the beach, and let's talk real estate. Now, some of you probably saw in my recent video about how the mortgage applications ticked up more than we've seen in quite some time due to the fact that rates have been dropping. But when you look at the big picture, and this is what I tell everybody to look at when it comes to the housing market, is the big picture, is that the reality is that mortgage originations are still down 47% in the third quarter of 2022, and that's a 19% decrease from the previous quarter. So as you guys can see, throughout 2022, the amount of loans being originated and actually processed kept falling throughout 2022, especially the second half, once mortgage rates really shot up and we saw the peak of the housing market in terms of prices, and it's pretty much all been downhill from there in terms of housing prices, as well as the amount of closings, everything, pretty much you name it. Since the middle of 2022 and beyond, everything has been going in a downward direction. But why is this significant, guys? Why are we talking about this? Well, it's significant because this is literally the largest drop in mortgage originations that we've seen in 21 years. Think about how long 21 years is, guys. That's even further past the last housing crash. Last housing crash started in 2007, 2008, you could kind of argue. And, what was that, 15 years ago? It's been 21 years since we've seen numbers like this. That's why this is significant. The other thing that's significant about it is that not all lenders are being hit equally by this, because you have basically lenders that do qualified mortgages, and then you have lenders that do non-qualified mortgages. Basically, to simplify, the difference is qualified mortgages are mortgages that are taken out by traditional buyers. Say you have a 9-to-5 W-2 job, you make $60,000 a year, you go get qualified and you buy a home based on what your lender says you can afford. That's called a qualified mortgage. But non-qualified mortgages are for borrowers who don't fit into that box. Even myself and many other self-employed people do not fit into that box, and it makes it very difficult sometimes to get a qualified mortgage because of the way that you earn income, for example. Like if you don't have a steady income because you have a business or you work for yourself, then usually qualified mortgages aren't going to be for you. And some people even say that non-qualified mortgages, are bad loans because they also look at people that have bad credit, which is true. That's how you can get a mortgage if you have bad credit. But the reason why mortgage lenders are starting to go bankrupt is because these lenders that specialize in non-qualified mortgages are getting hit much harder right now, because the government, Fannie Mae and Freddie Mac, does not buy those loans. Those are not packaged up into mortgage-backed securities, and therefore they're riskier loans to generate and don't have the government backing, where essentially they're guaranteed to be taken over by the government. So what happens with these is these mortgage lenders take on a much higher risk, and also that's why they charge higher interest rates. For example, companies like First Guarantee, they had to file for bankruptcy protection. Once interest rates started going up, like we've seen over the past year, lending volume dropped so much for their company, it left this company owing $473 million to their creditors. So that is significant, guys. So these guys haven't totally gone under yet, but another company called Sprout Mortgage, yeah, they're done. They shut down last summer. Another company called Really, with an I, R-E-A-L-I, they shut down. And then you have other companies like Housing Wire and Angel Oak and Keller Mortgage that they're not shut down, they're not bankrupt yet, but they're doing heavy layoffs just to stay in business, like so many other companies are doing nowadays. So they're pretty much in survival mode right now. And one thing people might be wondering is like, well, if I have a mortgage with one of these companies and they go bankrupt, does that mean I'm off the hook? Do I not have to pay the mortgage anymore? And obviously we all wish that was the case, right? Unfortunately, that's not the case. And what will usually happen is the FDIC will step in and work with other lenders to pick up what they call these orphaned mortgages, because that's essentially what it'll be, is it'll be an orphaned mortgage if your lender goes out of business. So not gonna get off the hook that easily, guys. But I just can't get over this trend that every time I turn around, it seems like every single week, we have a new data point that is like 20-year highs, you know, in terms of trends. You know, first we just saw right now with the amount of mortgage originations, 21-year lows, guys, okay? And now, the next thing is we have just hit existing home sales have fallen for the 11th consecutive month in December, hitting its slowest pace since November of 2010. So how long ago was that? 13 years ago? Another 13-year low, guys. It is insanity that all this is happening basically at once. Just in December alone, existing sales dropped 1.5%. And then we saw the total amount of sales in the year of 2022 at just a little over 4 million units, 4.02 million units sold in 2022, which was 34% lower than in December of 2021. So think about that for a second. The housing market slowed down so much in 2022 that the amount of sales went down by 34%, guys. That is massive. We're talking a third. So if you guys don't think that this is gonna change things and this is gonna impact where the housing market's gonna go for the next couple years, you're not thinking this through. And guess what? Last time that this happened, we had the subprime mortgage crisis. And guess what? This time we don't even have that, but yet these figures are the same as they were back when we did. So that's the interesting thing about this, because so many people who argue that this is not gonna be 2008 and everything's gonna be fine, is that, well, we don't have the subprime mortgage crisis like we had before. You know, all the loans that have been given have been good loans, but yet we're seeing this huge impact in the housing market, and this is just getting started. And the interesting thing about this is that housing inventory is still relatively low compared to where it was at pre-pandemic, and we're still seeing these type of slowdowns, which just also goes to show you the massive amount of impact that interest rates have been having on the housing market. At the end of December, housing inventory fell 13.4% from November. So in just 1 month, it went down 13%. And even though the inventory went down in December, it was still 10% higher than it was in December of 2021. So you're seeing all these anomalies happen in the market. And to me, it all makes perfect sense, because when you look at the impact that the interest rates have been having on everybody, it's not really a big surprise that this is going on. You're gonna have people out there that say, well, it's all gonna come back. You're gonna have low inventory throughout 2023. People are going to be coming back into the market once interest rates go down, like we're already seeing, and that's gonna fix everything. The Fed's gonna pivot, but that is just basically daydreaming, guys. The odds of that happening and everything just coming back from all of this like nothing happened is pretty much unheard of. You never really see that happen. And I doubt we're gonna see it happen this time either. And now even Mr. Lawrence Yun, who's been a huge housing market bull, of course, because he is the chief economist over at the National Association of Realtors. This is what he said this week. He said, markets in roughly half the country are likely to offer potential buyers discounted prices compared to last year. What do you know? Mr. Yun is now saying that you're likely to get a discount on your home purchase in 2023. Probably half of us will. So go figure. Imagine that, huh? Most weeks we always have layoff stories to cover as well. We saw Microsoft earlier in the week announce that they're going to be performing layoffs. Well, guess who's the big one on the ticket now? Google, guys. These guys are laying off 12,000 people. Imagine how many people 12,000 people is. That's bigger than a lot of small towns throughout the United States. So that's pretty shocking. Now that is worldwide. That's not just in the United States. So they're talking 12,000 layoffs throughout the entire world for people that work for them. But in all fairness, the people that are going to be getting laid off are getting some very generous severance packages. They're going to pay you for your full notification period with a minimum of 60 days, along with a severance package that will begin at 16 weeks salary with an additional 2 weeks of pay for every additional year worked at Google. So the longer you've been with the company, the more generous your severance package is going to be, which is the way it should be. And it's not like these guys aren't taking care of their employees. And in fact, I saw another article recently talking about how half of all tech workers that are getting laid off are actually finding better jobs than what they had before. I'm not sure how you would find a job better than Google, but hey, I've never worked in the tech field, and maybe they will find something better. But I wouldn't feel too bad for these guys, considering most of them probably will pick up some good opportunities after this. But what you have to look at from this is what this means for the economy. Why is a big company successful like Google? They're in charge of the entire internet, it seems like, right? Anybody wants to know anything, you turn to Google. You want to learn how to do something, you watch YouTube videos like this. You know, Google runs the show, essentially. And these guys are in a position where they need to do layoffs right now in the tune of 12,000 people. Let me know what you guys think about that. But you know how we just talked about Lawrence Yun saying that, you know, half of all home buyers this year, depending on where you live, are going to get discounted prices? Well, once again, the experts are behind the curve. We've been talking about this for almost a year now, and it turns out that for the first time since the summer of 2020, the majority of homes now are selling below list price. And this is data from last year, of course, because 2023 just got started. According to the most recent data from Zillow, more than half of the homes that were sold in November of 2022 sold below list price. More than half, guys. Only 28% of homes were sold above the listing price in November, and the year before, in 2021, it was 45% of homes were selling above list price. So you can really see just how much things are really starting to cool off. And Zillow's pegging the average home value throughout the country right now at $356,000, which is pretty close to what Redfin's data is for the median home price. And another phenomenon that the Zillow data revealed as well is typically during the holiday season, you know, that's when inventory is the lowest. So you can look at inventory graphs from the last several years, and they all show you that inventory tends to go down, you know, in November and December, holiday season. But even though inventory tends to go down, there's been so few people out there buying that in December of 2022, we saw home listings up about 16% year over year, guys, which is highly unusual for December. And it's not even that there's so many new listings coming to the market, it's really that no one's buying them. So you have more listings coming to the market, and yet they just sit there because no one's buying them. People can't afford them. Interest rates are too high. The home payments are too high. And really, if you ask me, I think we're going to see just a lot more of the same in 2023. I think you're going to see a steady supply of new listings come to the market, and especially in the springtime, in the next few months, and you're just not going to see them fly off the shelf like we saw over the past couple of years, because the incentive to go out and buy these homes isn't there anymore, guys. Most people just cannot afford these prices with these interest rates, and that's really the main problem with this. And it's probably going to continue to just keep the whole market at a standstill throughout 2023. Are there going to be sales? Of course there will be. It's not going to be like 2021 and 2022 where, you know, homes were just flying off the shelf. And I know there's people who are going to say, well, they're still flying off the shelf where I live. Well, maybe that's the case, guys, but don't expect that to remain the case throughout 2023. Now, every once in a while, we have to bring up the topic of rent control. And the reason is, especially because here in Florida, a lot of people that have been struggling with the rent prices in their area, just seeing how much it's gone up, so many people want to have rent control. In fact, in the Orlando area, they tried doing this and got struck down by the Florida Supreme Court. So they were not able to follow through with the rent control laws they wanted to put in place. But of course, over in California, things are quite the opposite, as many things are. And recently, California instituted a rent control law that affected a large portion of the state, most notably San Diego, which never had rent control laws on the books before. But things haven't been going exactly how they planned, because they instituted this law back in 2020. And basically how this works is that landlords over there can only raise the rent 5% plus the rate of inflation. No matter what the rate of inflation is, the rent increases are capped at 10%, okay? So you're guaranteed not to have the rent go up by more than 10%. And let's face it, guys, if you're paying $3,000 a month in rent and it went up by 10%, that's still a huge increase at $300 a month. So there's no denying that. Here's the catch. This new law only applies to rental units that are more than 15 years old. So if you live in one of those swanky new buildings in downtown San Diego, this doesn't apply to you. They can still raise your rent as much as they want, just like here in Florida. And even with this new law on the books, because it doesn't affect all properties, on average, San Diego rent was up 14% year over year from 2021 to 2022. And one thing that wasn't anticipated when they made this new law is just how much inflation would go up. So basically what this allowed landlords to do recently was increase it by the maximum. So a lot of these people are still able to increase by the 10% maximum for the older properties. And if you live in one of the newer properties, well, you're totally screwed anyways. But here's the thing, guys. Rent control does nothing to address the problem of scarce affordable housing. That's the truth. And it also disincentivizes the local builders from building more inventory, because it's kind of like a scare, like, oh, are they going to pass legislation where I won't be able to, raise rents here either? It's not very appealing to build a new building as a landlord in an area where they might control how much you can charge. Makes sense, right? Here's a really good way that somebody else put it. They said that rent control sounds great to someone struggling to make ends meet, but in truth, it keeps the cost of rent down just as well as communist governments around the world give their people liberty. Blanket price fixing like rent control creates perverse outcomes, and we end up hurting most of the very people that we want to help. So in the end, you're just hurting people who really can't afford things to begin with, because you're limiting their options. Because no matter what you do, when you have more people looking for a place to live than what's available, that is going to increase the price. That's just the way things work, guys. That's the law of supply and demand. And really what the people who speak out against rent control want to happen in the end is they want it to be easier to build new housing, guys. Especially in places like California, it's probably one of the most difficult places in the entire country to complete a new build from start to finish, with the amount of red tape they have in place, the amount of permits and things you need to get, and the amount of waiting, the amount of time that it takes to do it. It just makes the whole thing so inefficient that pretty much nobody wants to do it. The profit's not there. So, really they need to be addressing things like this of, where am I going to live? Like, how am I going to find a place? That's really what people need to be focused on with this. And unfortunately, they're just focused on the wrong things. They just want to control what people already have instead of incentivize people to get new units out there on the market, which will ultimately bring prices down the more choice that people have. Now, in a previous video, I told you guys about how there's going to be over 1 million new rental units coming to the market throughout the country. And a lot of you are asking me, where is this happening? Well, I have some information to share with you guys in case you're interested. So here's a huge list of where you're seeing most of the new construction apartments coming online within the next year. So the top place, actually, guys, the number one place you're seeing the most, Boca Raton, Florida, out of all places. The next is Midland, Texas. Then you have Humboldt, Texas, Frisco, Texas, McKinney, Texas, Alpharetta, Georgia, Orlando, Florida, Spring, Texas, Redmond, Washington, Caddy, Texas. And obviously you can see pretty much all of those were in Florida or Texas, which not a huge surprise considering how many people have been moving here over the past couple of years. But in case you're not interested in moving to Florida or Texas, there are some other options as well. You have Charleston, South Carolina, Wilmington, North Carolina, Little Rock, Arkansas, Denver, Colorado, Washington, D.C., Minneapolis, Minnesota, Henderson, Nevada, Arlington, Virginia. These are all places where you're seeing the most new apartments come online. So if you guys are looking for a new lease, you know, rents are going down. Now is the time to start looking for a place. If you're seeing, you know, still rent hikes in your area, I just gave you a huge list of places to start looking at if you want to hopefully find a better place to live at a more affordable price. If you guys enjoyed this video, make sure you hit the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.